Have you ever heard someone say, original Medicare is good, but you really should get Medigap too? If you're new to Medicare, that advice can raise more questions than it answers. What exactly is Medigap? Do you really need it? What does it actually pay for? And why do millions of retirees choose to buy another insurance policy after they've already enrolled in Medicare? In this video, we'll answer the 7 questions every new Medicare beneficiary should understand before deciding whether Medigap belongs in their retirement plan. Let's begin with the most important question. What exactly is Medigap? Medigap, also known as Medicare Supplement Insurance, is private health insurance designed to work alongside original Medicare. The key phrase is work alongside. It does not replace Medicare. Instead, it helps pay many of the healthcare costs that original Medicare leaves behind. Here's how it works. When you receive covered medical care, original Medicare generally pays its share first. If you have a Medigap policy, it may then pay some or all of the remaining eligible costs, depending on the plan you've chosen. Think of original Medicare as the foundation of your healthcare coverage. Medigap adds another layer of financial protection by helping reduce many of the out-of-pocket expenses you might otherwise pay yourself. So, why do people buy Medigap? The answer is simple. Original Medicare provides excellent coverage, but it doesn't pay 100% of every covered medical expense. Depending on the service, you may still be responsible for deductibles, coinsurance, or other out-of-pocket costs. For some retirees, those costs are manageable. For others, especially those who expect regular medical care, they can add up over time. That's where Medigap can make a difference. Another advantage is flexibility. Unlike many health insurance plans, Medigap policies generally allow you to see any doctor or hospital in the United States that accepts Medicare patients. There are no provider networks to stay inside. That nationwide access can be especially valuable if you travel frequently, spend part of the year in another state, or simply want the freedom to choose your healthcare providers. So, what does Medigap actually help pay for? Depending on the specific plan, Medigap may help cover expenses such as Medicare Part A and Part B coinsurance, certain deductibles, skilled nursing facility coinsurance, hospice coinsurance, and several other out-of-pocket costs that original Medicare doesn't pay in full. We'll explain the differences between the most popular plans in the next section. Just as important is understanding what Medigap does not cover. A Medigap policy does not include prescription drug coverage. That's why many people with original Medicare also enroll in a separate Medicare Part D prescription drug plan. Medigap also generally does not cover routine dental care, routine vision care, hearing aids, long-term custodial care, or other benefits that some people associate with comprehensive health insurance. Those services may require separate insurance or out-of-pocket payment. One point often causes confusion, so it's worth emphasizing. You cannot use a Medigap policy with a Medicare Advantage plan. Medigap is designed to work only with original Medicare. If you've chosen Medicare Advantage instead, your healthcare costs are managed under that plan's own rules and cost-sharing structure. We'll compare those two approaches later in this video, but for now, remember this simple rule. Original Medicare and Medigap work together. Medicare Advantage is a different path. Now that you understand what Medigap is and what it does, the next question becomes obvious. If there are several Medigap plans available, which ones should you actually pay attention to? That's exactly what we'll cover next. And should I choose? At first glance, Medigap can seem confusing. You'll see plans identified by letters, including Plan A, Plan B, Plan D, Plan G, Plan K, Plan L, Plan M, Plan N, and several others. The good news is that you don't need to memorize every letter or compare every available option. Most people researching Medigap today spend the majority of their time comparing just a few plans. Those are the plans we'll focus on because they're the ones you're most likely to encounter when exploring your Medicare coverage options. Let's begin with the plan many experts consider the benchmark for new Medicare beneficiaries. Plan G. Plan G has become one of the most popular Medigap plans available to people who are newly eligible for Medicare. Why? Because it offers some of the most comprehensive protection available under today's Medigap options. After you've satisfied the annual Medicare Part B deductible, Plan G generally pays most of the remaining Medicare-approved out-of-pocket costs that original Medicare leaves behind. For many retirees, that means fewer unexpected medical bills and more predictable healthcare expenses throughout the year. Another advantage is simplicity. Once Medicare approves a covered service and pays its share, Plan G generally covers most of the remaining approved costs, giving many retirees confidence that a major illness or hospitalization won't result in large additional Medicare-approved expenses. Of course, that level of protection usually comes with a higher monthly premium than some other Medigap plans. We'll talk more about premiums and why they differ in the next section. Now, let's look at another popular choice, Plan N. Plan N is designed for people who are comfortable sharing a little more of their healthcare costs in exchange for a lower monthly premium. Instead of paying the highest premium for broader coverage, many retirees choose Plan N because it offers a balance between monthly cost and out-of-pocket expenses. With Plan N, you may be responsible for certain co-payments for doctor visits and emergency room visits, depending on the circumstances. In addition, Plan N generally does not cover Medicare Part B excess charges. While many healthcare providers accept Medicare's approved payment amount, some providers are legally permitted to charge a little more in certain states. For many retirees, those additional costs never become a significant issue. For others, especially those who value maximum predictability, Plan G may provide greater peace of mind. Neither plan is automatically better. The right choice depends on your healthcare needs, your budget, and your comfort level with occasional out-of-pocket expenses. There's another option that's becoming increasingly popular among healthy retirees. High Deductible Plan G. As the name suggests, this version of Plan G requires you to pay a much larger deductible before the policy begins paying benefits. In return, the monthly premium is usually much lower than a standard Plan G policy. Some retirees view this as protection against major medical expenses, while accepting responsibility for more routine healthcare costs. If you rarely visit the doctor and want to keep your monthly insurance costs lower, High Deductible Plan G may be worth discussing with a licensed insurance professional. Finally, let's briefly talk about Plan F. If you've been researching Medicare online or speaking with friends who enrolled years ago, you've probably heard people mention Plan F. Plan F offered extremely comprehensive coverage and became one of the most popular Medigap plans for many years. However, federal law changed who could purchase it. If you became newly eligible for Medicare on or after January 1, 2020, you generally cannot buy Plan F. People who were already eligible before that date and already have Plan F may usually keep their coverage if they wish. So, while you'll continue hearing about Plan F, most new Medicare beneficiaries today will be comparing Plan G, Plan N, or High Deductible Plan G instead. At this point, you may be thinking something doesn't quite add up. If every insurance company offers the same standardized Plan G benefits, why can one company's Plan G cost significantly more than another? That's one of the most important questions in choosing a Medigap policy, And it's exactly what we'll answer next as we look at premiums, enrollment, and how to avoid costly mistakes. By now, you understand what Medigap is and which plans most retirees compare. But before you decide whether Plan G, Plan N, or another option is right for you, there are 3 important questions you should answer. Why can the exact same Plan G cost different amounts? When is the best time to enroll? And can you change plans later if your needs change? Let's start with one of the biggest surprises. If Medigap plans are standardized, why doesn't every company charge the same premium? The answer is that while the benefits of a standardized Medigap plan are generally the same, regardless of the insurance company, the companies themselves are free to set their own prices. That means a Plan G policy from one insurer generally provides the same core Medicare benefits as a Plan G policy from another insurer, but the monthly premium may be very different. Why? Insurance companies consider several factors when setting premiums. Your age, where you live, tobacco use, available household discounts, and each company's own pricing strategy can all influence what you pay. There's another important factor that many retirees don't discover until much later. Insurance companies may use different methods to calculate future premiums. You'll often hear 3 terms: community rated. With this approach, everyone purchasing the same policy in the same area generally pays the same premium, regardless of age. Premiums may still change over time because of inflation or other factors, but not simply because you grow older. Issue age-rated. Here, your premium is based largely on your age when you first purchase the policy. Buying at a younger age generally results in a lower starting premium than waiting until you're older. Although premiums can still increase over time for reasons such as inflation, your age after enrollment is not the primary reason for future increases. Attained age rated. This is one of the most common pricing methods. Your premium is based partly on your current age, so it may increase as you get older, in addition to other factors affecting healthcare costs. Understanding which pricing method a company uses can be just as important as comparing today's monthly premium. A policy that appears less expensive today may not remain the least expensive over many years. That's one reason it's important to compare more than just the first month's premium before making a decision. The next question is just as important. When should you enroll in Medigap? For many people, the best opportunity comes during the Medigap open enrollment period. This is a 6-month window that begins when you're both age 65 or older and enrolled in Medicare Part B. During this period, insurance companies generally cannot deny you coverage or charge you more because of your health. You have the strongest consumer protections during this enrollment window. Many Medicare experts consider this the best time to purchase a Medigap policy because your health history generally cannot be used against you. So, what happens if you wait? That brings us to our third question. Can you change Medigap plans later? The answer is sometimes, but not always. In many states, if you apply for a new Medigap policy after your initial enrollment period, the insurance company may require medical underwriting. Medical underwriting simply means the company reviews your health history before deciding whether to accept your application and, where permitted, the terms it will offer. There are also special situations known as guaranteed issue rights, where federal law gives beneficiaries important protections. For example, if certain types of coverage end through no fault of your own, you may have the right to purchase specific Medigap policies without medical underwriting. The rules can become complex, so the important point to remember is this. Don't assume you'll always have the same enrollment rights later that you have when you first become eligible. Understanding your options early can give you more choices and help you avoid unnecessary complications in the future. Now you've learned how Medigap plans are priced, why premiums can differ even for identical coverage, when the best enrollment opportunity usually occurs, and why timing matters. That leaves one final question. Is Medigap actually the right choice for your retirement? Let's look at several common retirement situations and see how different people might approach that decision. And why enrollment timing matters. But one important question remains, and it's the only one that no one else can answer for you. Is Medigap the right choice for your retirement? The answer depends on your health, your lifestyle, your budget, and the type of financial protection that gives you peace of mind. Let's look at a few common retirement situations. Imagine you're a healthy retiree who visits the doctor only occasionally and rarely sees a specialist. You may be comfortable accepting some out-of-pocket costs in exchange for a lower monthly premium. In that case, you might compare options such as Plan N or high-deductible Plan G. The right choice depends on how much financial risk you're willing to accept. Now consider someone managing one or more chronic medical conditions. Regular appointments, specialist visits, lab work, and ongoing treatment often make healthcare expenses much more predictable, but also more frequent. Many retirees in this situation appreciate the greater financial predictability that broader Medigap coverage can provide. What if you spend part of the year in another state? Many retirees become snowbirds, dividing their time between two homes, or they simply enjoy traveling throughout the country. Because Medigap works with Original Medicare, you generally have the flexibility to receive care from any healthcare provider in the United States who accepts Medicare patients. For many retirees, that nationwide access is one of Medigap's biggest advantages. Perhaps international travel is part of your retirement plans. Some Medigap policies include limited emergency medical coverage during foreign travel, subject to the plan's terms and benefit limits. While this benefit isn't intended to replace comprehensive travel medical insurance, it can provide an additional layer of protection for retirees who occasionally travel abroad. Finally, think about your retirement budget. Some retirees prefer paying a higher premium each month in exchange for more predictable healthcare expenses. Others would rather keep their monthly premiums lower and accept that they'll pay more if they need medical care. Neither approach is automatically right or wrong. The goal is to choose the approach that best matches your retirement priorities. It's also important to remember that Medigap isn't the right solution for everyone. If you've decided that Medicare Advantage better fits your needs, then a Medigap policy isn't part of that coverage path. Likewise, some retirees receive comprehensive healthcare benefits through a former employer or union. Others may have coverage through a spouse's retirement plan. Before purchasing any Medigap policy, make sure you understand how it would work with any existing health coverage you already have. As you make your decision, try to avoid a few common mistakes. Don't choose a plan based only on the lowest monthly premium. Don't wait too long if you're eligible for your Medigap open enrollment period. Don't assume every insurance company charges similar premiums for the same standardized plan. Don't overlook how premiums may change over time. And don't buy the first policy you see without comparing several companies. Before making your final decision, ask yourself these questions. Have I chosen Original Medicare because it best fits my needs? Which Medigap plan best matches my expected healthcare use? Have I compared several insurance companies instead of only one? Do I understand how my premium could change in the years ahead? Am I making this decision during my best enrollment opportunity? And most importantly, does this plan fit comfortably within both my retirement budget and my retirement lifestyle? If you can answer those questions with confidence, you'll be well prepared to make an informed decision. Choosing Medicare coverage isn't about finding the most expensive plan or the lowest premium. It's about selecting the coverage that gives you confidence, protects your retirement budget, and supports the way you want to live. In our next episode, we'll complete our Medicare series by explaining exactly when to enroll, which enrollment periods apply to you, and how to avoid costly late penalties. Understanding the timing can be just as important as choosing the right coverage. If you found this series helpful, please subscribe to the Retirement Briefing. Our goal is to help you make informed retirement decisions with clear, practical, and unbiased guidance. Thank you for watching, and we'll see you in the next episode.